Welcome guys, that speculates is right here. I am about to show you a topic which is really important, and it will be interesting for every one of you because I've seen a lot of questions which are like, how do I know if X key level will work, or a question like how to choose the correct key level which is expected to give a move, right? So right now you will have the chance to learn how to choose the correct key level and expect a move, and with this way it will be much easier for you to be patient, get more precise entries, even set alarms at key levels, right? Which, when tapped, you then start looking for setups, for soups, to get moves, to easy targets, and this will help you get more profits. And yeah, let me just start. First, whenever you look for a key levels, I want you to start looking for daily key levels and above only, which means you look for daily highs, lows, order blocks, gaps, breakers, and whichever key level you like, but mainly these three and FG, yeah, these four. Also, not only daily, everything above means weekly, highs, lows, order blocks, FEGs, monthly, highs, lows, order block FEGs, quarterly, right? Highs, lows, order block FEGs. Now, of course, what you can do is align them all together. Like you tap quarterly high, you make monthly order block or FEG. Inside of that FEG you form weekly order block, and then you trade from daily soup of a high, right, to strike a bearish move. You can align them, but this is the thing I want you to ponder on, and go see that your charts use only these key levels. And the important stuff about using only these key levels is that there will be less PDRAs to choose of, which means on daily time frame, let's say you have this move up and now you're retracing. On daily time frame, you might have only one thick candle, which will be your order block, and daily fair value aligns with it, which makes the order block higher probability. But on 1 hour, inside of this, you can have fair value gap, order block, here some breaker, I don't know, from low that took high and like that, another FEG, right there FEG, and like you have multiple key levels to choose of. And this thing is failing you because you want to see continuation from here. First, you're on premium, right? Then here, fake order block or something in premium again, failing you. This thing failing you because you have a lower low right there, which you can take as a liquidity, right? And the only thing that you want to look in these legs is for daily and above key levels, because this will make you choose less PDRAs and this will not confuse you. You will have only two key levels, right? You have daily fair value gap and daily order block. So what means this? You have only two setups to firm, right? You either get a move from here and some invalidation if you have, and move to the upside. And if this fails, your next setup will be formed from the daily. And if both things fail, you start looking for weekly PDRAs or monthly PD arrays, which are higher time frame than this, because this order block on daily time frame might be a weekly fair value gap. And this is why you always start from higher time frame to lower time frame, which means you can start even from quarterly to monthly to weekly to daily, refining PD arrays and finding the highest probability ones. I hope this makes a lot of sense to you, because this is the way you do it. Now I will jump to some charts to show you some examples and see how it goes. Now, as I said, we start from quarterly, right? See this. We have quarterly PD array, fair value gap with breaker. Now on quarterly, you have only 3 PD arrays, you can say, right? Over, fair value gap, breaker. But you see how all these align with the fair value gap. Like if you have studied my thing, which I said from sell side delivery to buy side delivery to sell side breakdown, and rebalanced it, and we have a fair value here. Now first we have soup, and as you know, breakers can leave gaps unfilled. So this quarterly gap and breaker, and that soup will hold, in my opinion. And this high is liquidity pool because it's the quarterly fair value gap. So this is my only one key level, which when the new quarter starts, I would look to trade off of. I know we rejected that here. We tapped some breaker, giving a move up, fair value gap right there. I'm expecting move up, even from the monthly time frame because of the candle range, right? Soup, like this. Now this is my only key level, which is the quarterly, that I am expecting to continue my bearish move, right? And now I must have patience for it to get tapped, not shorting until this gets tapped, right? Which means on the weekly time frame, after the soup right there, I am bullish until I tap the PD array, which will start giving me a move, right? And here we have another PD array aligning with that, which is even more confluence. Order block, range high that took a low below it, and this high is quarterly fair value gap, right? 3-month FG aligning with weekly order block, perfection. Now from this soup and close above, I'm bullish until this. And now this is why every bearish key level will give you a move. See this now. You become bullish after the close above, right? Now, if let's say I see this, I know I'm bullish until this gap, right? Now on monthly time frame, do I have any PD arrays? I can say this rejection block already tapped, move up. On weekly time frame, sorry, what do I see? Wick below, close above, this thing giving me an order block. And now on weekly time frame, I have only one key level, which is this weekly order block, that I have to wait to be tapped, which means wait for retracement until tapped, then start looking for buys again until here, until higher time frame takes over again, right? Now when the new week's open, we wait, we tap this, only one key level, not 30 key levels. You have only one key level. If this fails, we will come to this move, to the low. But I am bullish until I have another sponsorship from the higher time frame. And now I wait for move up, like that. Now, if we are going to retrace, this is my only key level that can give me move up. if we don't open a gap, like. But what happened? We see open high week, swooping at week number 1 of November, tapping the key level, engineering liquidity, giving a move, but see how this move opened a fair value here. Now everyone is shorting this, but we have weekly PD arrays which can give a reaction for a second tap, which will be a week 2 if we tap it, manipulation from the monthly. See, move down, sponsorship, until so, because we have PD arrays, like they can give us a reaction. They are weekly, they are not 1 hour. So after this soup, now I have only one key level. We close above, right? Now if this PD array fails and we break below this low, I'm bearish. Let's see what happens. We close below, right? Break. Now my order flow is shift. Low that took a high being broken. And I have only one PD array that can sponsor a move down. And this thing here, this order block, will give me a retracement to get inside of this key level to then start a move down. Now, from here onwards, I'm bearish, right? I have key level. I expect a retracement from opposing PD array until the next PD array to continue my order flow. On daily time frame, see first tap, Thursday, new week open. This is my range. Candle range, this is my only key level that can give me move down. I have range high, order block. I wait for tap. Which day? Tuesday, key day. Open high week, soup, key level. Expecting low close. Until next PD array, right? Now I have tap of only one key level, not choosing from too many. And this weekly key level aligns with daily fair value gap and daily candle range, right? Perfect. Soup to soup. Down. Now weekly, I have only one, this key level starting to fail, right? Now I have only one key level that can give me retracement up into another key level into move down. Now I am waiting to see what happened after we tap it. We tap the key level, which day? Thursday, mark the new week, wait for the new week. You're already at the end of old week. Now, new weekly, open, low. Turtle soup, low, right? Key level. This is key level. Now, it's healthy to expect retracement until we get to our next PD array. Which PD array? Do you have any weekly PD array right there? Only this. Daily, do you have any PD arrays? Yes, you have this. But above that, you have this order block. Monday, open high, low close. Monday, time-based range, broken out of. And exactly this order block aligns with the gap. And we have candle range, getting retracement from the key level to the range high into order block, into expecting moves, soup. And now this is today. I called this soup. This is my target. This is my key level. And on weekly time frame, how does it look? We have weekly fair value gap, right? This weekly fair value gap aligns with my order block, with my daily fair value gap right there. And right below it, I have a weekly high, which weekly high is weekly candle range. Now everything aligns, and this will be either be turtle soup or SMT to continue our order flow down, because we are now retracing, coming from weekly order block and SMT. with October low, which is exactly this one. Yeah. SMT, key level, retracement into another PD array, like retracement, into tap, into continuation, like that. Price moves between time period and price period. And time period is open to close, and price period is key level to key level. And like that, you can get your trades. Now let's see Bitcoin. Monthly time frame. How many key levels do we see right there? We see only one, right? This key level. This is too much up, too much. It's 20k up. So I expect if we are gonna test a key level, it will be this one. We already tapped the August, which is this. Oh, this, sorry. So now let's see weekly. How many key levels do you see on weekly? We see only this fair value gap aligning with the monthly and breaker right there, aligning, making this PD array really high probability. Even though we have SMT right there, I still expect this to be soup, because look at this. This is the monthly gap, this high. And the monthly gap, which is liquidity pool, is right below a weekly key level. So it's healthy to expect when a new yearly opens, right there, we can see open high into liquidity pool, into key level, and maybe then and only then continuation into another liquidity pool, into then refining to see what will happen. Now you see how I chose only one key level, aligning with liquidity pool and another key level. You always have to stay on the higher time frame and expect moves. Now let's see this. Quarterly, we have SMT right there, giving retracement here and Dixie. Good. We have continuation, sorry. We had the retracement, expecting continuation. This is my target. Going on monthly time frame, how many key levels do we have that can sponsor our move up to this high? 0, right? You can call this a key level, but we rejected it. So if no close above this, I will not count it as key level. Now I can count this as a breaker, because on weekly time frame, it's a high being broken out of. I have drawn liquidity and key level. This is only my key level breaker, right? Now we have buy side, sell side delivery, and buy side breakout, and we have only one fair value, which is this, which is fair value to buy from, aligning with the breaker. And what I'm expecting now is either a move from here, from this fair value area, or deeper retracement into this and maybe this order block with a soup to continue the move up. Now you can have only 3 trades. Search for longs there. If stop loss is hit, wait for this to be tapped, look for another long, and write the swing trade. Now going to the daily time frame, what do you see? You see this breaker aligning with this so-called bearish candles counting as order block, and they all align with this fair value gap, and this fair value gap is perfectly aligning with intermediate term low right above it. So this is perfect P array to catch a move up. This one aligning with this. And now I have only one place to wait for move up. This is my key levels. When we come this, I can start hunting for setups, not questioning myself. How many key levels do I have on 1 hour? Should I short from here? Wait, yeah, wait. Or oh, this, see this OB, this give a reaction. We have change in state of delivery, model number 1. Perfect. Inverse fair value gap. Great aligning. We have 1 minute fake market structure shift, expecting bullish turtle soup to go up. See market profile aligning on 1 minute. Bullshit. If you have only one key level, you wait for the weekly range to be completed. Right there. Mark the weekly fair value gap too. And this is it. This is what you need. You need liquidity pool. You need key level aligning with all of these. And now you wait for price to come. Search for entry inside. Right up. This is how you choose only one key level. And it's really crucial to choose them, because if you see how often they are respected, you know what to do. See, starting from quarterly, right? How many key levels did you have to continue up? This change in state of delivery, aligning with this. Only one key level to give you the move up from this. Now we close above. We are bullish, right? Reject the lows, rebalance, go up. And now on quarterly, how many key levels do we have? Order block aligning with FEG. This is new year, okay? Monthly time frame, how many key levels do we have? 0, right? We have only these hard time frame key levels. Now let's go on weekly time frame. What do you see? You see this aligning with this order block, and this quarterly gap being a liquidity pool right up above a key level. And you have one more liquidity pool right there. And this is turtle soup. Rebalance, up, close above, right? This is valid order block with liquidity pools. And what is helpful to expect if you want a bullish? You expect open, range, low, key level, move up. And you have only one key level aligning with it. This gap with this order block. Yearly something, 6 months something, no. 3 months quarterly, monthly aligning, weekly order block. Expecting this. I hope it's clear. So as I said, use only daily key levels and above, which means weekly key levels, monthly key levels, quarterly key levels, and above, of course. And above doesn't matter, we are enough above, right? Use this, including highs, lows, order blocks, fair value gaps, and breakers too. Also, right there, because there is something that I've got asked very often. Which highs? Swing highs or candle highs? So you can use both. But swing highs are key levels to give you retracement from. Candle highs will give you continuations. What means this? This one, swing high, can give you a retracement down into another key level, because right there, see, this key level is used already. This key level is being used already. Everything is being used. Expect this. This was not tapped. We just close above and move up. No tap. See? So this is my only key level that is not used for now. And this high, swing high, rejection. See, swing high, rejection. Swing high, rejection. And right there, swing low, continuation. Also, not only that, you can see as this giving continuation setups. And after turtle soup, expansion comes. After turtle soup, expansion comes. After soup, expansion. After soup, soup, expansion, right? This is it. See, soup, close, next candle expansion, soup, next candle expansion, soup, next candle expansion. You get it? Soup, next candle expansion, soup, next candle expansion, soup, next candle expansion. Now you say it yourself, right? Soup, soup, turtle soup leads to expansion. This is it. And this is the video which I wanted to make. I hope you enjoyed it. I hope you learned something. And thank you for watching. Subscribe and comment down below, because lately I will not have so much time, because right now I will teach my students inside Ray Trading Protocol every Sunday 10 a.m. and I will not record very often. As you see, quarterly series will continue after month of April, maybe, because Range Trading Protocol mentorship for Q1, which is my last mentorship, will end on 1st April. And yes, thank you for watching. Subscribe, comment down below did you like the video, and give me a thumbs up. I love you guys. Z Speculator here. I hope you learned something, and let's conquer the market together. Bye bye.